Alec, because part of the issue here was a raising of requirements, margin requirements on silver. What's your take on that?
Well, I think they made 3 increases. The market ignored the first 2. The third one kind of broke the camel's back. It was all within the span of a couple of weeks. And so you saw a violent reaction because these are highly leveraged players in a lot of these markets. But I think what's interesting is I think it may be fueling some selling in other commodities. So the people that have leveraged silver trades on and were forced to liquidate those, that's one thing. But I think we're seeing clearly they may have been forced to do the same thing in the oil market, in the gold market. Those are much bigger markets, especially with oil, that have much greater global economic implications. So silver is one thing, but this sort of deleveraging, this panic deleveraging, is spreading to much more widely used and high-profile commodities. I think that's the scarier aspect right now.
This is definitely the scarier act, and I guess the question is, if we are going to see margin requirements tighten in silver, is it only a matter of time that we see this happening in deeper markets like the oil market?
Yeah, I mean, my view has been that because of the crazy move that we saw in silver, it almost doubled in 4 months, that the regulators wanted to crack down a little bit more in that market than maybe in some other ones. I'm not expecting it in the oil market or in the gold market, but because these guys are all trading the same markets, they may not need to raise requirements in the other markets to force selling there.
Yeah, and Maria, remember also, as the dollar goes up, hedge funds are involved in the carry trade where they're borrowing in dollar-denominated, security, borrowing in dollars and speculating in commodities. And this shot that we had in the dollar today forces that carry trade to be unwound rather rapidly, and that was another factor that probably played a role in today's sell-off.
And throughout it all, we're looking at new expectations now for the global story. Are we going to see slowdowns in places like China, which of course would have unbelievable ripple effects across the world? Let's take a look at the Baltic Dry Index. This is the shipping index that we place such...
Give us this forensic analysis of whether the selling is over is OptionMonster.com's John Najarian. Dr. J, what did you find?
Well, of course, we talked with you guys, and you guys saw it too, the unusual activity in silver leading up to this, because it's like an earthquake. Certain tip-offs happen before the earthquake, whether it's cockroaches or dogs. In this case, it was unusual buying of puts in the SLV, about 22 times normal last Friday, Melissa. Guy talks all the time about seeing a surge to the upside and seeing a 7% sell-off in that same session or something. Did see that in spades here, and then all of a sudden you get the combination, a perfect storm, or a Cinco de Mayo, as in sinking boat, because you see Carlos Slim announcing that he sold 96 million ounces of silver as a hedge against some of his holdings. Then you hear George Soros saying he is selling some of his. And, by the way, they're both rumored to have pretty significant collars on. In other words, buying of puts and selling of calls above the market. And the calls they sold were right up around the 39 strike, and the puts they own are down around the 23 strike. Now, as far as the Merck, of course, the CME jacking up margins 4 times, now 5 times if we count Monday, because it's going up again. All of a sudden, your leverage goes from 22 or 25 to 1 down to about 10 to 1. And so that, Melissa, I think is really putting the pedal to the metal and pushing people out the door in here, because they don't change margin on you in Apple or in Netflix or in Google. But when you're trading something like what Joe trades every day with these commodities, they can change the margins like that. And when they do, it's going to result in something like this.
John, when you hear of a Soros or a Slim making such big trades, aren't they already done already by the time that we would hear about it? So yes. But the market is looking for a trigger to sell off?
The footprints were there, though. The footprints, they went...
Those are big footprints.
They are, but they went through the sand trap and raked them afterwards. So Slim put this out on the 30th, basically Saturday after the last trading day of last week, that, by the way, I've sold 96,000, or 96 million, rather, ounces of silver, which was up substantially from his previous position. Soros, we don't know exactly how much he's sold, but you can see it somewhat in the hedging that whoever accommodated them, if it was an over-the-counter trade, a lot of those trades found their way into the SLV or the ZSL, the double short silver. And what I'd say is you can sell the rips and buy the dips, doing what most of us on this desk do, trading stocks. But because of this margin issue, if you sell the rips and try to buy dips in commodities, you'll get carried out feet first. That's exactly what happened today. But it was one of the reasons that I started to consider. I didn't get long, but I did exit all of my short positions in silver today.
Oh, you did? So you sold at ZSL?
I am out of the ZSL calls, and I'm out of the SLV puts. Took all the profits.
Nice. John, when you look, and you can see it right here, buddy, the SLV, 294 million shares traded hands today. Now, when you look at
77 million normal.
Right, and when you look at that surge in volume, obviously volatility is what's attracting the volume. Do high-frequency traders participate now? Are they in there playing in that space?
They are, but they're not. In other words, I think a lot of the algos back off on keys like volatility. Like I say, those little feelers that go up with cockroaches and so forth. I think the same thing here, Joe, that the high-frequency traders that are in there to step ahead of you for 1/1000th of a cent on the bid or the offer, I think they widen out their spreads a little bit when they see things like this going on, because these moves go parabolic. You really can't get in the way of these moves. If you get caught, you're chasing for dollars, not pennies. And I think a lot of people basically laid off. But the panic that I saw into the bell, in particular, I talked with John Malloy, the producer, about watch the final hour here, Malloy, because futures stop trading at 1:30 Eastern time. Into the final hour, we'll see the people that got the margin calls that are watching it extend in the after hours are pounding on anything they can to get hedged, and I think that was the panic we saw into the bell.
All right, Dr. J, always good to speak with you. Thanks for stopping by.
Thank you all.
John Najarian of Option Monster.
That's the second time today, by the way, that
John Malloy has been mentioned. I thought the same thing. He's famous. You can actually go onto the website.
You're going to want a piece of that.
Trade school. Yeah, you can go into the website and see a picture of John Malloy if you're curious.
Handsome man.
And you now made it 3 times by mentioning it.
Well,
anyway.
way too much time.
Moving on here. Emerging markets start falling out of